The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Shut up and sit down! I used to have a teacher who said that. Shut up and sit down! Chinese. Welcome to the Weekend Podcast. I'm joined by Peter and Steve. You're all right, lads?
Yes, very well, thank you. How are you?
Yeah, we're going to be quick because Steve is doing. What did you say you're doing? Steve.
Plans have changed since I've messaged now. Because
first of all, let's take people through the backstory here. In fact, we could probably put this towards the end of the podcast. Normally for chat, so it stocks to start, of course. But Steve said he's going to have to start at 7 o'clock. We're recording this call past 6, and he said, "But I have to go at 7 because I've got potato rosti on the go." And what is a potato rosti? What is that?
Roast potato. Raised potato.
It's a Thai green potato rosti, so it's like surrounded in potato shreds, and it's got like a Thai green mushy thing in the middle. Lovely.
Oh, look at him! Look at him with his shreds and Thai green stuff.
And it's mushy in the middle.
Yeah,
so
my plans have changed, Joe, because I realised I didn't have...
now he's having a pot noodle. A lot easier, really. Super noodles, whatever that. Yeah. Cool. All right then. Anyway, lovely stuff. So what election, boys? Hey, in fact, by the time people listen to this, that's the magic and the flexibility and the versatility of podcasts. You don't know when people are listening. You know, right now, Trump's won. No, hang on, Biden's won. Biden. Yes. But I did tweet a while back. So there's only two options here. Number one, Trump wins. Number two, Trump doesn't win, but he says he wins, and then starts arguing and won't leave the White House. What's it going to get? Which stage is it going to get to? Is it going to get to where, let's see, Melania's knocking on the toilet door? Donald, come out! I'm not coming out. I've won it. No, come on, Donald, you have to leave the White House.
Have you seen that spoof video going around of like him in a play school, and then come on, Donald, you got to leave, and they're literally dragging him out by his legs.
It's mad. It's absolutely mad the way he's acting, and all his followers are even madder than him. But you realise now, it's that guy just stormed on TV. This guy, a normal guy, was reading out something about the election process, and this guy just stormed into shots and "You're trying to steal it! You're trying to steal it! You're trying to just shouting his head off." You think that's the Donald Trump voter right there. Yeah. And it's absolutely insane. People praying out to this office, their hands are shaking, saying, "Give us luck. It's nothing to do with luck, love. You're not going to get..." Do you know what? And this serves as one thing. If Trump had stuck to championing the economy, right, he would have won hands down. Because he's done quite well there, to be honest. Stock market's gone up. If he hasn't done well with the coronavirus. But rather than just, taunting people or just calling names on Twitter, you're the president, for heaven's sake. I wouldn't do what he's doing on Twitter. Just concentrate on the economy, be a bit professional, and he would have won. But people don't like the way he's turned out. Give him a chance. No, but Steve, to be honest, right, the jobs in America, it's done well. He's sort of said, on the economic front, if he just stuck to that, he's sort of done what he said. Listen, who remembers the first election he was in? All he had to promise was to build a wall, and he won because of that. That's all he had to do, was build a wall. And that's what it comes down to. See, even with investing, try and keep it simple sometimes. Try and keep it very simple. Because there's so many metrics with investing, right? You can get bogged down in everything. From, you can go into some sort of sites that give you metrics on everything. You don't need to know. To know. And that's why a lot of people don't get involved in investing. They give it to the so-called professional advisor who charges them the earth when you could just take out a tracker fund, And people don't know what a tracker fund is, but I've done some videos on it. But I mean, keep it simple. And in fact, I had a friend of mine text me, right? And she said, I got some money to invest. And she'd asked me before, I said, "What should I do?" And I said, "Do you know what? It depends." I said, if I were you, I said, if you want to, act at the market and be the market, you can earn about 7-8% a year if you put it in a tracker fund. You can beat that if you buy the dips, by the way, on tracker funds quite easily. I said, but I told this lady called Vanessa, I told her about the Vanguard fund, right? I said, if you look at this, I said, good returns over the last 10 years. Since it's been inception, it's at 126%. So you've doubled your money over 10 years. That's better than any bank will give you. That's very good return,
Well, she's lost loads of money since the coronavirus.
No, I know, but do you know what? In 10 years, that Vanguard fund, that's a life strategy, 100% equity, has only had one negative year. After that, it normally had a very good year, right? So
Was that this year?
no, it was in 2018. In fact, I'll get the figures up, right? So, and let me just find it. In 2018, it had minus 5.04% return, right? The year after that, 2019, 21%. So normally, as I said, it's one negative year. This is a negative year it's having now. So the year after is going to be good. So if you buy now in the dip, and while you're in this, while you're zoomed into this area, and you think, oh, this is rubbish fund, and I get out of it. No, this is the time to buy, because next year it'll be an outsized return generally. And like I said, look at that, 2012 at 11.8%, 2013 20%, 2014 9%. That's good. 2015 4% or just below. 2016, look at that. Even on 2015, 3.49%. 2016, 26%. So when it has a bad year, or relatively bad year, it really bounces back. So you can beat the market, Steve, quite easily just by buying bad years. When the bad years happen, start buying the fund. That's all you need to do. And I said to Vanessa, it's up to you. Listen, I said, you can go in Vanguard. It's quite safe, because Vanguard, this strategy fund, basically has 20% American stocks, 20% British stocks. So basically all the big stocks around the world. You got Apple and all that in there as well. And everything. I said you can play it safe and put your money in the Vanguard. So return 126% over 10 years. So it's up to you. Or you can take on a bit more risk. So you can double your money in 10 years. Or you can take on a bit more risk. And I did suggest Salt Lake Potash. I said it's fully funded. I looked through my stocks and I thought, what would I advise? And I thought the safest stock I probably hold at the moment now is probably either OnTheMarket or Salt Lake Potash. I think it's Salt Lake Potash, looking at the return, because they're fully funded. They go into production mid-Feb. I watched Tony Srichik on Diggers and Dealers, big conference, mid-February. How long is that away?
Not long. What's that?
November,
2.5 months.
December, January. So it's 3 months, isn't it? 3 months, they're going to start producing and generating cash. So they're fully funded that. So what's the risk here? And I said, so essentially, you can do, and I said, if they get 3 lakes up, they're going for 3 lakes pretty much, 1 million tonnes per annum. I said, essentially, you can go for doubling your money quite safely over 10 years of the Vanguard fund, taking a bit more risk, and almost 5 times your money within 5 years of Salt Lake Potash. What would you do?
Steve.
Wow. Yeah, it's a good question, isn't it?
Steve, what have you doing? Have you been listening, have you?
Yeah, of course I am.
Okay. So.
Yeah.
Now, this is what Vanessa... Go on.
No, it's not really so blunt, because you can't... You're saying guarantee that Salt Lake's going to go up by 5 times, but, there's still an element of risk, isn't it? That something can happen. Whereas,
I'd put it in both. I'd split it in half and put it half in one.
Yeah, well, she said to me, first of all, thanks, we'll check it out. I'll read up on it first. Is it an ethical company? I said, yes, it is. I said, I was just about to text her that. I said, listen, first of all, they've been given a green label certification. Part of their debt funding, raised to build a mine, or it's not a mine anyway, it's not mining, is from the Clean Energy Finance Corporation, an Australian government organisation. All they do basically is evaporate, brine water, evaporate water in the sun. It turns into some salt like potash, and they just process that and break it down. So it's very...
It rains loads.
That's good. They need water in those big lakes. So what I'm saying is, someone did ask me to talk about...
Steve, you should go to the AGM and ask that question.
Yeah, what if it rains?
What if the sun goes down and it doesn't evaporate?
He'll say, mate, we're in Perth, Australia. The sun doesn't go down.
Yeah.
You know what I'm saying?
Yeah. What if it's really cloudy all year?
Well, so where I live, Tony, where I live, Wales, rains all the time. No sun at all. Said, yeah, which is Perth, mate. All right. Yeah. Oh, good point, Tony. Yeah, good point.
I hadn't heard about that.
Yeah.
Right, as you were. Carry on.
So anyway, someone did ask me to talk about funds. Now, the only fund I did hold was the Vanguard. I'll go back into that. But, you're talking about over time, I was buying, not a lot, actually. I was putting a certain amount a month. It wasn't a lot percentage-wise compared to the rest of my portfolio. So what I'll do now is I'll take advantage of the smaller cap stocks, a bit more risk, and then I'll put some more back in the bank. Because eventually... listen, you buy the dips in funds, you can outperform the market quite easily, and you can get a pretty. Their return is about 8 to 10%, I think, over the dips as well. But you buy the dips. That's all you need to do is buy that dips on the fund, and you'd outperform, you probably get close to 15-20%, per year, which is very good. Very good indeed, isn't it?
Yeah. Well, and for in Vanessa's case, it does make sense, because unless she's going to be avidly following stocks and whatever, it's a safer way of having a diverse portfolio just through one investment.
Yeah, it's hard, isn't it? When someone asks you advice like that, and I understand why now. I feel very bad about it. I wouldn't like to manage people's money because I'm more risk away with my. I don't care. I take on more risk.
We've made that mistake, haven't we, Pete?
Yeah.
No, I take on more risk with my money than I would. The more I go on, actually, the more I realise. But you guys know, more enough about it now, and we know, the basics. Don't chuck everything in one stock, all that stuff. But when you talk to people, there's so many things they don't know, or you've got to take for granted. You have to understand. You got to diversify, so a little bit. You can't just chuck everything in. So you've got to be very careful, so it's hard.
Yeah. Well, and again, so I've tracked my performance the last few years, and, I'm up and it's good, but I probably, it's not mega, or average it out over every year, it's probably, 10% or, something gain. And that's including some really big gains, but that's because I've made some bad errors and lost some money as well.
That's it, isn't it? The portfolio is very dynamic. It's two things. It's what you gain and what you lose. Now, if you can cut down on those losses and think, where did I go wrong there? Just by holding on to something like a resource stock for ages, that's never going to be generating any cash for a long time. It's got a very volatile ride. It may come out in the end, but
equally, I've had a year where, it's grown by 50-60% or something, the portfolio. That's been a great year. But, it's just over the long term, when you start looking at it, you start going, it averages out. Yeah. But it's still better than better than the Vanguard, if I just put it in the Vanguard, and way better than just sitting in a bank account. So,
and also, it's more fun than having it sit in a bank.
Yeah, absolutely.
That's why, Rich...
/stressful.
I find it fun. But you know what, though? It's like I'm learning all the time. My investment philosophy has changed even over the last 12 months a lot, and I realise I'm getting better at it. I'm now intending to hold. I got 6 stocks, and I'm prepared to hold those, and I'm buying every little dips every now and again. I'll buy a little bit. I bought the majority of it already, those stocks, but I am topping up every now and again. So I think, it's a little dip there. I'll have a little bit more, and. But you learn, as you go on. And I think it's like Rich now. Rich, I used to work at Rich, Paddy's friend, and you know him as well. You work at Capital Radio with him. He's in our WhatsApp group. Very rarely tweets anything. I think he's got the group on mute, to be honest.
Yeah,
100%.
Yeah, exactly. Because he never joined in with anything apart from we had a joke. I sort of make up a joke that he texts his free text Friday. He gets one text that's free on his Friday on his plan, on his phone plan, and he texts. He did text this weekend.
To be fair, he's got quite an important job, so,
Has he? Why? How important is that? What do you mean? He's hardly come up with a virus for the vaccine, is he? He's on radio. What do you mean?
Well, no, I'm just saying...
He's not saving lives, Steve.
And Steve wants a gig back in radio, I think. Hey!
Yeah. I really don't. He's just doing well in the company then, isn't he?
Yeah, he's doing very well. Rich started off, when he started at Capital Radio with Johnny Vaughan and all that, Rich started just, as what's called a production assistant, I think, with answering phones, And now he's like, he's in charge of a network, isn't he? Or one of the things.
Heart.
Yeah, Heart, there we are. But he should come on, because he's got, I assume he's got like 50 kids, though. But I assume he's got a bit of spare cash, if it's not spent on the kids. But
we should go and visit him once, because he's got a sauna in his garage, hasn't he?
Yeah, he's married a Finnish girl, and they go naked. Yeah. He went, apparently, first time he went to Finland to see the in-laws, they all went naked in the sauna.
Yeah.
He's like, what's going on here, mate? What's going on here, mate? Yeah. I don't get naked in the sauna with your father-in-law. It's like, just sitting there, hairy-ass guy, sitting there with the wife, the kids and all that. What's going on here? It's really odd, but that's part of the culture, part of the culture.
Yeah.
Do you know what I find funny, right? Why is it that blokes on Twitter with normally less than 30 followers seem to know more about the efficacy and safety of the coronavirus vaccines than highly trained, experienced doctors and clinicians working at Oxford University and global pharmaceutical companies like AstraZeneca, right? So this vaccine trial chief investigator, Andrew Pollard, came out. He's a professor in paediatric infection and immunity, right? He told the Science and Technology Committee he is optimistic the University of Oxford trial and AstraZeneca could present late-stage trials results, possibly revealing whether it works before the end of the year. And then, if that's the case, they'll be vaccinating people before the end of the year. This guy is highly, trained. He's a lot of speed. I got a tweet on Wednesday from someone called Colin70434, whatever, otherwise known as the Aim Slayer, and he says, "I can't see it myself, and I'm sure it won't stop me getting COVID." He said, "It won't be safe. I won't be taking it." I said, "Hang on, mate. Who are you like to trust?" The guy from Oxford University and AstraZeneca, highest office in the land, pretty much, an authority in the land, in the world, pretty much. They've tested 30,000 people now. Or Colin708 from Twitter, who's got less than 30 followers. Where do these guys get their confidence from? Where do they get confidence from, though? I don't understand.
Yeah. Well, some people might say the same about you.
Yeah. But I know. But do you know what I'm saying? Though? I mean, would you be vaccinated? Are you scared to be vaccinated?
Not. I don't know. Probably need to. I would look into it more to understand it. I don't see it as like a be all and end all. I have to have it. I would just. I'll look into more about what I think entails.
I think I'm the same. I think I'm not going to go chasing for it when it comes out. But
you don't need to, do you? You don't need to.
You can go here and get it. I'm not going to be queuing or waiting in a line or anything. I'm just going to be, when they offer it, I'll have it.
Yeah, but you don't need to, see. I mean, they said, AstraZeneca said they'll be vaccinating over 80. I thought, did I read this right? They're going to be vaccinating over 85-year-olds. So, what's the point? That's what I thought myself. And then I thought, and NHS workers. I thought, yes, I understand that. People who work on the front line, you need to protect them against. You need to protect them against the COVID. But they need to keep working as well. So yes, but so what? So what happens is the first, I think, 30 million doses from AstraZeneca will be for vulnerable people in the UK, and so that's good. So you protect that layer of people. Yeah, and the most vulnerable as well, people with conditions. Then we can move on, and I think this will now increasingly happen over the next. I think Pfizer probably come up with data in mid-November, and then you've got AstraZeneca before the end of the year. It's going to be happening next few. In fact, right. Listen, right. Pete, asked the same questions you asked me on the WhatsApp group, because I said quite an engaging discussion. I think because I said I've done a spreadsheet. I'm going to do a video on the weekend. Escape hunt, right? Will be. Yeah. You're probably wondering when I got to Escape Hunt, but I went to visit Escape Hunt, and I liked it so much. I bought the company. Do you know Victor Kayam? Steve, do you remember Victor Kayam?
Yeah.
No.
Do you?
No. Where from?
How old are you, Pete?
I am 43.
43. So I'm nearly 50. There was a very famous American guy, Steve, right? He used to come on. That was his adverts. It's about Victor. What is it? It wasn't called Victor Kyle. What was the shavers called, Steve?
Remington.
Remington. Do you know Remington shavers, Steve?
Yeah.
Well, he used to come on, this guy. He's looking at Donald Trump, tan, that kind of look, but bit smaller. Hi, I'm Victor Kayam. Yeah, exactly. Hi, I'm Victor Kayam. And I liked Remington Steel so much, I bought the company. And he talked about shavers, and that was his advert. But anyway, someone said that to me on Twitter, because I had obviously held stock of Escape Hunt. I had a stock of Escape Hunt. I went to the Escape Hunt thing, and I said, the last escape room I went to was down the road. It's a local one-man band thing. It was okay, but it's like an office unit pretty much, and you're in there, it's a bit stark, the lighting. You go into Escape Hunt in Basingstoke.
That was an escape room. That was just something.
Yeah, no, it was like an office with stuff on the walls. It was all right, but they try their best. But you go to Escape Hunt, it's a different thing. It's like having an 80s cinema, experience compared to like a real deluxe now, super cinema in this era, where you can have lean back chairs, no extra expense, and all that stuff. So, big sound around. So the sets are very good. You go in there's videos, everything. The brand is just a premium brand, and that's why I upped my holding. I went there. I see the kids. To be honest, it's not for me and the missus are quite like shouty and stressful people. We were like, she was going to kill me at one point because I kept dominating everything, and Fred and Monty was shouting as well, and Fred and Monty loved it, absolutely loved it. But the sets are very good.
It's so funny if you got kicked out.
Yeah. At one point, I'm a
big part of this company.
I know. At one point, I lay on the floor saying, "For heaven's sake, I'm sure we got that." And I was on the floor going mad. It was stressing me up so much. But the sets, Aladdin sets are excellent. They are very good. And it's 6 different games in one site. So there's virtual reality as well, and obviously got the Zoom things going on. So I went up to over 3%. First time ever I've issued a TR1. I had to look at the form and understand how to fit it in and all that stuff. And
I thought Paddy had photoshopped that when I first saw it.
yeah, no. But I wanted to get to 3 million shares, right? I'm close to that now. I've issued 2.5 million was on that. Because in my mind, I've done a spreadsheet, right? This will get to £1. I'll have 3 million quid then from Escape Hunt. And I think it'll get to that. And I modelled it out. It's going to happen. I mean, we're locked down now, yes, but they're all furloughed. Don't burn any cash. They're probably going to come back and open up with 2 new sites already because they've signed on. Cheltenham's ready to go. Watford's almost going to be fitted out. In this lockdown, like I said, these lockdowns are getting less strict. You're allowed to build. You're not to go to work as long as you're a builder. But you can't go to work if you're a leisure hospitality. So they can't actually open up the venues, but they can, build them. Yeah. So I think they're going to open up now. They have 14 sites in December. And I think they're going to start pretty much opening up a site a month, pretty much. And if they do that, close to that, they'll be worth 50 pence by this time next year, or December next year, and a year after that, £1. That's what I think.
You think in 2 years' time it will be 30 times where it is currently? Yeah. Not 30 times, sorry, 10 times. Sorry,
10 times,
10
yes.
times
Let's be honest, it's only an 8 million market cap. So it'll still be sub 100 million. And I think the brand will be well recognised by then. And in fact, I think it'll be more than that. I do think I'm just using basic... I'm not using economies of scale. I'm not even pricing in virtual reality or the franchises or the play-at-home games. So I think I'm being quite conservative, yeah. But ask me the questions you asked me. You said to me about lockdown.
Yeah, so you were saying... you didn't mention the pound thing, but you were modelling that it was... I'm going to scroll back. So
it's 11 pence. It's 11 pence right now. I think it'll be 50 pence by this time next year, which is a four bagger pretty much. So up 300%, right? So, and I've looked at the models, and that's. I mean, you can go by time or go by site, and I think they could be opening about a site a month, which they have been doing. I don't know if that'll stick, but I mean, even if they just go by site numbers alone, let me just open this spreadsheet so I can see it. But I think there'll be 50 pence in pretty much, in December next year. And £1 or more. I think it'd be more. I mean, conservative. £1 or more.
You say double. Yeah, okay. So in 2 years' time, yeah.
I think as you get bigger, the economies of scale get better. You spend less because you're generating cash.
Yeah.
They've already signed legals for 15 sites. They break even on 15 on a normal economy. But obviously, it's COVID at the moment, so they probably need more than that. But I just genuinely think we will get to, January, vaccines will be doing the rounds. By March, there's many companies have said most of the population will be vaccinated by March, and even if they need it.
I've got a question. So previously, when you've invested in and you've probably gone a bit over your amounts that you probably should, you have de-risked quite quickly when you've had little spikes. So what's the difference in this one then? Say, for example, Gfinity, you went quite hard on that, and then you de-risked when you had a spike for no reason of any different news, just because you I had too much in there. So it's the same reason here. So what's so different here?
But the thing is, I'm not overexposed in Escape Hunt. I mean, I've got 6 stocks. All my stocks I own, I'm not going to say how much I own because people work out my portfolio value, I don't want to say that, but all the stocks I own range between a holding of 10 to 20%.
Well, you can sort of work it out then, can't we? But
so
anyway,
between could be a lot more, but it'll probably go. Obviously, it'll go higher than that. But you know what, Steve? I've been looking into this a lot, right? And we have this arbitrary figure. We've come up with this as a safety sort of barrier, say 10% maximum or 20%. I'm happy. Gfinity went up to like 30, 40%. And because I knew it was so cheap at the time when I started buying it, I thought it's only going to go one way. Can it go? They're funded. It can't go below that price of 1 pence, and I was buying at 1.5, and I thought this is an esports company going to be profitable next year, and they were valued at what? I think it was like at the time we started buying it, 10, 12 million or something like that. It was ridiculous. I see the same in Escape Hunt. People are seeing this lockdown. They don't see the lockdown. Look beyond the lockdown. The stock market looks beyond that. Of course, but I'm looking 12 months online. So this company, there's no lack of demand for their product. It's a very good product, right? There's no lack of demand. I don't see what could go wrong. They're funded. They've got cash. That's
my question. Should we go through those questions?
Go for it.
Because that was my point. I said I don't think the demand is a problem, but supply could be. That's my in terms of when I haven't seen your model exactly and how you mapped it out, but and depends how conservative you are. Because of lockdown and the uncertainty over lockdowns and future lockdowns, and yes, there may be a vaccine, but they equally may not be. And then even if there is, we're going to see regulations in venues like this. And so is that going to have an impact on capacity? So, yeah, demand is there, but supply is potentially is a problem.
But do you mean supplies in what? Supplies in sites? What do you mean? Sites? They go, or what?
Supply as in like the actual revenue in terms of actual people demand, but ability to supply that demand, i.e. you've got tight regulations, so you can't fill the capacity.
And I said, listen, lockdowns. Listen, and you said to me, well, you said lockdown wouldn't happen a couple of weeks back. I know, but I wasn't the only person to think that. Boris Johnson said that a couple of weeks back. He said like leave the country. But listen,
that's what I'm saying.
Have you noticed? Successive lockdowns are getting less patient. People are with it. And also they're becoming less severe. All right. Last lockdown was 3 months. It's about a month, isn't it? Right.
Yeah.
And also we got a vaccine on the horizon. We got therapeutic drugs that are like dexamethasone or whatever. That's working now. People know a lot more about the virus. Less people are dying because they're being treated better. So I just genuinely think it's all about helping the NHS and suppress that wave. Less people are dying. By the time we have a vaccine, we'll have therapeutic drugs and a vaccine. And I genuinely think, I don't think there'll be any further lockdowns. I think there may be tier 1 or 2 or 3. But did you see their figures?
You can't possibly say that, is my point.
I know. But listen, there's 180. There's 180 vaccines in development, right? 180 vaccines in development, right? And I genuinely think a handful of those from top companies will be successful. They only need to get 50%, efficacy to work out to get FDA approval and safety regulations as well. We'll get there. I think there's so many people now saying the majority of the population will be vaccinated before March next year. I believe that. I think it's going to happen. And I think there's becoming less and less tolerance for more lockdowns. Like I said, look how severe this lockdown is compared to the last one. First of all, it's a third in the amount of times. It's a month compared to 3 months. And also, you can work. There's certain people who don't work in hospitality or leisure. Everything apart from hospitality and leisure, you can work. If you can work from home, you can drive it. You can build. Loads of things.
You know what was interesting, actually? I was in London working yesterday around Paternoster Square, it was obviously the first day of lockdown, and it did not feel like lockdown at all.
Don't
get me wrong, it was quieter, but it was like, this is no way a lockdown at all.
People are not taking it serious, are they? Yeah, I know. People are not taking it serious last time. And so it will bring the virus down, because just the basic ethos of the lockdown, where people have to sort of realise the social distance and bring the numbers down, it'll help the figures come down. But we now have, it's just going to bridge a gap till we get the vaccine, I feel. And
of course. But what I'm saying is that there is that uncertainty over that.
You mentioned unemployment, didn't you?
No.
You said, but what about people being unemployed? And on the thing you said, what did you say? You said something about that.
I said redundancy, as in system redundancy, i.e. the empty places due to lockdowns, due to or regulation. That's what I'm saying about this whole supply thing. Like, I haven't seen your figures, so I don't know what you're basing it on. But if you're basing it on historic figures or forecasts of what you think a venue could generate, how can we, with any certainty, say that at this point? Because there is going to be periods of redundancy. There's going to be periods of
it is. Listen now, though.
You can actually deliver.
Yeah, in the video on Sunday, you'll see. Right, from now until basically, so we got a month of lockdown. So in December, they'll come out with, I assume, because they've said in the latest update, Cheltenham's ready to go pretty much. They were going to open that this month, but obviously they can't now. And Watford, they're going to be fitting that. It takes them about a month to fit. That's all they do. So.
But what revenue are you talking about?
I'm talking about minimum. So essentially, right, on an EBITDA level, right, a site will earn 150 grand of EBITDA a month. I'm looking half that, and then I up that to £100,000.
What's that 150 grand based on? Historically,
that's what the sites generate. Yeah. So if you look at their data and all that stuff, and I've gone through their broker notes, and they said they've broken down the sites. So they turn over 500,000, and off that, the EBITDA cash generated is 150 grand. Right, so some sites do better. That's the average. Now I've gone down to half that. So I've said right in the months of like October through to December, that's including lockdown. That's half that, 75 grand. And then I've got from January to March, which is when pretty much I think we'll have pretty much opening of the economy properly again because the vaccine will be here. I've gone to £100,000, and not back to the average, below average still.
Yeah.
And then only in April do I say right, we're going back to normality pretty much. And then and I haven't included VR or any other sort of their play-at-home games or their franchises. That's when you get up to like 150 grand EBITDA per site. They'll have one site per month pretty much, and by December 49 pence a share, which is 341% increase from where we are right now, and they're going to roll them out. They've got, and the thing is right this. Barring, don't worry about, I mean, we're shutting down for a month. They've been given opportunities. They wouldn't have got in these sites if it wasn't for COVID. They're signing deals on high footfall sites like, the Festival Place, which is like, what's the one in St. David's in Cardiff? They'll probably get one there as well. All the high footfall sites, they get one at, right? They couldn't afford that before COVID. So,
yeah, no, absolutely.
And they're basically in deep doo-doo. The owners, the landlords of these commercial sites need. I went through a basis, so we walk in there. We drove in. It was people queuing the cars to get in. In the barriers, the car parks to get in.
What, to escape hunt?
No, into Festival Place, which is like St. David's,
right.
In Cardiff. So the car parks are jam packed. And then you go in there, you'll see, I don't know how many there were, probably a handful of sites, empty units, in a premium shopping centre. And that doesn't happen very often, And so that's why these landlords are asking people now who've inquired before, say, listen, can you come back and have a look at this unit? That's why they're getting these premium sites at, peppercorn rents, pretty much. And they offer incentives. So this COVID has helped them a lot. It really has. The capital expend, down payments on the units, nothing. So they're having to spend nothing. They've got cash as well. So they are now grabbing market share massively, and you can go to your local, 2-bit sort of independent operator, or you can go to a proper premium brand escape room and experience it properly in the centre of town. In Christmas, I think we'll open up. We've got to open up for December. There's so many venues that need opening up December. This will be, for the corporate sort of Christmas parties, this will be ideal. Mm-hmm.
Yeah. So what you've done, like in terms of factoring in that into your model, I get that. I don't know if I agree with potentially with any certainty you can say next summer we'll be back to full normal what they were.
No, I can't say any certainty. I'm just going modelling it out.
No, but even if you model it at half, which you were doing for the next 12 months. I can see that it's a positive story potentially. And so, I don't know about your valuation there, like 49p. That would be lovely if it is.
Boys, listen, I'll be saying that. I won't rub it in, but I'll be saying it this time next year, right? I'll be saying it probably be one of the best performers because the guys behind this, if you look at their experience, you would never ever see the management of this company behind a sub 10 million micro. They're all from, proper institutions, and they're all from brokers that raise millions. And that's why when they raised that money, they raised a big chunk of money. They were literally, their market cap when they raised that, what was it now? So 7 pence, and this was 4 million. They raised almost double their market cap on a time when lockdown was happening. That says a lot about a company. It's like, because it reminds me of Cahill Friel and Open Orphan. You can't, you can only raise money if you've got good connections, in bad times, and they did it. They raised almost the size of their market cap in money, and these guys are well connected and they're very professional outfit. They got people like Luke Johnson involved. Luke Johnson was the original investor in Pizza Express. They got John Story involved. NED. These are big investors. These are not stupid people. This will be honestly a Hollywood Bowl style sort of brand that everyone will be aware of in about 5 years' time, and you will have a nice little chunk of it. And you're thinking, do you remember when we were questioning that? It'll just be another option, another option to go out. Shall we? You don't have to. Thing is, the average person probably haven't heard of escape rooms. I know people who contact me. What is an escape room? I've never heard of it. What do you do? Or they have heard of it, but they never try it. And so you don't have to go every month. the average person go once a year, and this company will do well because they'll be the brand that stands out. Let's try that escape thing,
not the cost they charge. No, Jesus.
See what are you talking about, Steve? It's 20 quid a person. You spend that more than that on a few drinks, isn't it?
Well, that depends what you drink.
But it is quite a jump in entertainment, what you normally pay.
It's 20 quid. You go bowling, you spend 20 quid. You go cinema, you spend 20 quid.
No, you don't. No, you don't. Funny enough, I did actually compare the cost of bowling when I did it. It was because at bowling you can get for about 13 quid, So it is a bit of a jump in price for
7 quid difference.
For a family, that's expensive, isn't it? If you go
for
family of 4.
1 hour's worth of entertainment, that's pretty costly. You're not aiming at, and you said this. You're not aiming at the.
I know, but this is a real question.
Lower incomes.
No, we're not aiming at lower incomes. I mean, I misunderstood Pete saying that he was talking about redundancies due to COVID. I said, listen, the people these places, attract are not low-paid people who made redundancies. And also. 95% of the population is still employed. Even though we get these big mass numbers coming out, we're still not above 5% unemployment. But what I'm saying is, Steve, this question about this price, that isn't the problem. The demand isn't the problem. The problem is they can't get enough sites out there in COVID at the moment. So have you seen like 25% up year on year? That's even with tier 2 and 3. That's with some of their sites in Manchester and Liverpool. There are sites in Manchester and Liverpool and in Edinburgh. They're in tier 2 and 3, in fact, Liverpool and Manchester in tier 3, and still their like-for-like revenues are up 25% on last year. This is a fast-growing company, so all the chat about...
that doesn't include... That's...
No, but let me just say one thing. All the chat about it's very expensive, that's not a problem for them. Then it's not a problem with lack of people. I was there at Basingstoke, and while we were sitting there for 10 minutes... I saw about 10 people come up saying, can we come in? We have to book, and can we get gift cards? It was like people were inquiring non-stop. It's like, this is a business I want to invest in. It's like people were literally walking up there every minute or so inquiring about it.
Was it you with a different wig every time in glasses?
Yeah. So you can argue the price point, but all these escape rooms, Steve, are on about the same price. Even the independent little crappy ones on the road are 20 quid for an hour. And so I don't think people would... begrudge spending 20 quid.
From my point of view, because like I said, bowling is cheaper, and also if you're playing with 5 people, it's not an hour, it's a couple of hours then, so it is a night's worth of entertainment, whereas it's 20 quid and it's an hour's worth, so it's not a whole night. But I think people will pay it. I'm not debating that, I'm just saying it. Even I think it's
people are paying it. So that's it. So as I said, the problem isn't demand. They're getting demand. They have demand.
Yeah. In terms of valuation, bringing it back to the actual what you're valuing, what PE are you using when you're pushing out these figures? And even if we say
leisure companies on average can range from 8 to 15. I've looked around everywhere. Leisure companies growing. Listen, it all depends, of course.
You've based it on 15, I assume.
No, 10. So if you're a growing company, you can literally, and you're still hype around it, you can chuck it up to as much as you want. But I've just gone for 10. And they say the average, actually, if you look it up, average EBITDA multiple for a leisure company is about 13.58 something it was. So I went with 10. That's why I easy to do 10. So that's what I've done. So, but also, like I said, I'm not counting in economies of scale, which they achieve. The costs come down a little bit when you've got a lot more venues there, and also just the other games they've got going on, like play at home, the VR games, digital games, all that stuff. And franchises, 38 franchisees. Last year, 1.1 million from franchises, which is a 300,000 EBITDA. So I'm not including that stuff. So it's conservative. We go to a 4-bagger. So that was my point. Was as long as you are being conservative in your figures and valuation, then very, 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 very.
Yeah, I've bought into this company, so I'm not doubting that. I'm just doubting that there is potential. But I'm interested in your figures in terms of being a pound into. It'll be lovely in 2 years' time, maybe.
Do you know what's nuts? Nuts is that literally we've had a 50% rise since I mentioned them. There were 7.5 pence when I mentioned them. They're now 11 pence, right? They're still 8.8 million market cap. A 10-bagger here with their aim is 50 sites, right? They can get to they'll still 10-bag and still be under 100 million on fundamentals, not on hype.
Yeah, but so work that back. If you're saying 10, 100 million, so a P of 10, you're saying 10 million earnings of 10 million, basically, in order to be if you're using PE. I'm just trying to
but also
work out that's
but if you're talking about a double-digit growth every year, listen, literally, people pay crazy money for growth. It's all it's about. If you want the best returns on the stock market are growth companies. Let's say when you're growing, people will pay up to anything. If you can continue growing, the share price will go. And we all know share prices overshoot, targets massively. Once the momentum's with the company, people keep buying. People keep telling other people about it. People keep buying. And I've got companies. My biggest mistake ever is getting out too early. On companies like Powers Energy or Open Orphan, I got way too early. And I thought the momentum kept going. Once it's there, you can't stop it. So
yes, no, I mean that is,
So people will see. People will start. I remember people questioning Vasarian's valuations for ages. When they were at 50 million, it went to 60 million, 70 million, 80 million. They kept questioning it. What is this based on? 90 million, 100 million. He got to 200 million over 200 million he got to. And then, most people ejected and thought it cashed in way before that. But that's momentum. Once people start talking to other people about it, and you see a brand, especially when there's a brand on the street.
That's a slightly different thing where that's a bit pie
but when you see a visible brand, but hang on a sec, when you see a visible brand that's out in everyone's town, and they say this company's growing like crazy, people start buying it. People don't believe when the share price is down. People start believing when the share prices are hot.
Yeah. Oh, I totally agree. And like I say, I've bought some, but I haven't bought 3% of the company, but I have bought some.
Why not, Pete?
I'm just, I looked behind the sofa and there wasn't quite enough cash. But I, of course, if the valuation is anywhere near what you're saying, then that's great in a year's time. And if we get on top of COVID and we sort this out, then I can see a real booming time in the stock market next year.
I think we're nuts. Really good. I think we have a massive Santa rally. I really do. Massive. Take your positions now. Take your positions. And where should you position yourself? Do you think it should be in COVID stocks or the stocks that will be hammered down in the leisure sector? I think, or the hospitality sector or whatever, entertainment sector. I think it's that area. The stocks like, even if you want to go bigger, like EasyJet or TUI and all that, those kind of areas there, I think those will start. Once we get a vaccine, those will go nuts. Carnival Cruises, all those holiday companies go nuts.
Escape Hunt got hammered down way before COVID was even a thing.
Yeah, I know, but because it came to the market at £1.35. £1.35. They raised about 40 million, I think, all with big investors. The hype was in there because there was a new thing, Escape Hunt. It's a new leisure activity. Really? Yeah. What? Cinema? No. Bowling? No. No escape rooms. What is that? There's cash on you. Everyone piled in. Again, the hype cycle kicked in. They realised the cash burn was going to be massive until they got to about 15 sites. So every year they're burning cash every year, and now we're at inflection point.
No, they didn't have any. Well, I'm looking at the chart. You wouldn't say they had any hype. It's been a fairly
downwards,
decline, downward decline from
no, but the hype was pre-market. When they raised the money, it was pre-market.
Sure,
so the brokers sold it to everyone at really massive levels.
And everyone just flipped it.
And so people said, how much money are they earning? Oh, they're not getting money at the moment. No, they're going to be burning cash. Really? For how long? Oh, they need to raise a lot of money still. And now they've raised that, pretty much their inflection point. They're going to start generating cash on site 15, break even. And I think it's going to be. I think next year's stock market will be massive rise.
If you're right and your valuation and your time frame is right, then that's amazing. Unfortunately, I'm inevitably cynical on these things, and so things always change and things always take longer than you expected, and then there are unforeseen things that unfortunately will impact the commercial performance. That might not dent performance in terms of sentiment in the meantime, because momentum, like you said, might drive it forward because people think about the growth in the future. So you may well see a really great growth in the next 3-6 months, even though in 12 months' time we might be back down to where we are now.
I agree. I mean, but momentum was going. Do you know what I've been buying this week? I bought a little bit of Salt Lake Potash. I bought a bit of Gfinity actually on the dips. You bought some as well. Gfinity, people are not getting it. People start worrying about little dips. Don't worry about little dips. It's 27 million market cap now. That's what it is. Right? They've got enough cash. They're a profitable esports company, hooked up with the biggest brands. Esports is going to become huge. Just do me a favour. If you listen to this and you hold Gfinity and you're doubting it, just sign up to Google Alerts and type in esports, and then you get once a day you get an email with all the esports, and you'll see how much interest there is in esports. It's phenomenal, and it's only going to get stronger. It's a massive theme. As I keep saying, I wouldn't know this unless I had kids. My kids do not watch TV. They do not watch terrestrial TV. They watch gamers or they're playing games. Esports is going to be massive. It's going to be bigger than real sports. Full stop. It will be. It's easy to get involved with for kids. And
That's
so,
a sad state of affair when that actually happens, though, really, let's be honest.
Maybe yes, but you know what? As an investment, it's a good play. Don't worry about it. The theme is massive.
Don't about the future. Don't about the generations. No, don't about that.
Did you? But I missed this. Someone tweeted this. As a Polarean is rising, and I tweeted out, okay, Polarean submitted their NDA, which is a new drug device, to the FDA 30 days ago. And they asked for priority review. That means a quick, fast track review of it, and get the FDA to give a stamp of approval within 60 days. No, sorry. The FDA have to get back to them to say whether it's been accepted for fast or priority review within 60 days. We're halfway there. I thought that was part of the reason why it rose today. It wasn't the reason why it rose on Friday. It's because Boris last night. I didn't even realise he did a briefing last night. Now I missed them, but apparently he said, as part of an NHS package of 34 billion they're going to spend the NHS. 360 million will be on MRI scanners and the tech surrounding that.
Wow.
Wow. Yeah, so I didn't realise. Right. So just one country is going to spend £360 million improving MRI scanners and the tech around that. And Gfinity's tech is like... basically,
Polarean.
Polarean's tech. I was trying to find this.
What's video games? Why are you having an MRI?
Polarean's tech essentially... you attach it to MRI scanners, it's an add-on, it's compatible with every MRI scanner, and it makes it better. But so it's GE, Siemens, Philips, and it increases MRI systems asset utilization. So they go in, they use it more and more, they get more value for money out of it, and it makes the hospital more profitable. And I think in the future, you can't really see what the effects for COVID's had on lungs unless you have Polarean's tech on your MRI scanner. So it's going to be a massive benefactor of this, COVID issue we've got right now. So no doubt. And I'd be very surprised. I'll buy more, actually, if the dip comes. If FDA don't give it, I'll buy more than the dip. Because
I was hoping there would be a sell-off this week after lockdown was announced. There was a little bit early on at the start of the week, wasn't there? But I put in orders, and only Gfinity's actually filled this week. But yeah, Polarian was one I was hoping people would take a lot of profit that's been
fair
made
play.
recently.
I like that automated order. I used to do that a lot, Pete. And you know what? It takes out the emotion out of it. And that's the problem with investors. We get emotionally attached. We buy on highs and sell on lows. Now, if you just, in the cold of the day, analyse what you're doing and say, oh, look at the charts and I'm going to buy here and just put an order in and let it sit there for a while. Like you bought on the Thursday on the dip and it bounced a little bit on the Friday. So... I genuinely, if you look at the chart, it's quite bullish. It's got a series of higher lows, a series of higher highs. Yes, you can have a bit of volatility, but it's going to grind higher.
For Gfinity.
Gfinity, sorry.
Yeah. Yes. But and then, I had, Polarian. I even had an order in for Escape on. It didn't quite get down to, didn't get down to 5p.
I keep looking at it. I won't go nuts on if Escape and rise on big days, I won't go nuts. But I mean, down days, I'll just buy a little bit more because I want 3 million.
Really? Okay, you haven't got enough?
No, well, I got 3 million. I don't have to notify until I get 4%. So 3 million is not 4%. So shares. So because I'm saying I get 3 million. I'll actually get £1. I'll have 3 million in cash from Escape Hunt.
Yep.
If you can sell it.
Yeah, but at that level, Steve, I mean, it'd be 100 million market cap, wouldn't it? Or more than that. So, so I'll be fine. So it'll be a bit of liquidity. It'll be a very, very well-known hype stock. Be lots of liquidity there. Oh, and Joe Biden has won.
Oh,
is he?
No, I don't know.
Breaking news.
Oh. Sorry, Steve, your Rosty's...
No, I didn't cook it. I'm just defrosting something in the freezer now, so you're fine. Don't worry about it.
Defrosting something in the freezer?
Yeah.
That'll never work, Steve.
That'll never work, Steve. You can't defrost something in the freezer. The freezer freezes things.
Good point.
How are you defrosting it?
I put it on a 10-minute defrost in the microwave.
Oh.
In the freezer, So I'm going for a curry instead of my rosti. So.
Okay.
Did I tell you on a speed awareness course online, 3 hours online? In fact, the guy cut it down by 2 hours, but quite good. But he's a bit like
that was speedy.
He reminded me of James Corden a little bit. But
Right.
he tried to do a couple of jokes. In fact, he said one, which I didn't realise. It talked about signs. He said, anyone here work on the roads, the motorways? And it was 9 of us online. This guy called George online stuck out. Borat. He's a bit like Borat. Completely inappropriate. And he said, no one works on the roads. And he said, my father works on the roads. He said that this is the guy hosting it. He said he got sacked as well. Got sacked from the roads. He said, I didn't tell me, but he came on one night and all the signs were there. Oh, sack for stealing. That's what I missed.
Oh, there we go. Yeah, you messed that up.
Yeah.
Mate.
And George went, we talked about something else, about a serious point about crashing, and some people lose their lives and that, the effect it has on other people, all that stuff. I was doing 35 in a 30-mile-an-hour limit in a dual carriageway in Southampton. It's like, I wasn't going like nuts, And I got through all this, anyway. And he said something about this family of Oxford, dying in Oxford in a car crash. And George went, and they die of COVID. And everyone was really silent. And the host said, George, have respect, yeah? Okay. And at the end, he said, Graham, are you ever speeded? Come on. You ever speeded like 45, 46, 47, 48, 49? I said, I have speed, yeah. And he said that all the time. He said, and you couldn't really see him. He was dark. He had no idea. You couldn't really see his camera. He was dark. It's like, everything he kept saying is like, get Barack off this call, for heaven's sake. But
you evaluate your 35 in a 30 zone, though?
Yeah, but no, they didn't do that. But the thing is, I read the thing. If you're like literally 30 to 35 or below that, 35, you don't get any points or speed awareness. And they said it came through on my, my form came through. Said, my letter said I'm doing 35. I said, well, hang on. Was I doing 34.5 and you rounded up? Because if I was, I shouldn't be on that call for like 3 hours with Borat. Should I really? Because I'm below the threshold. But no.
Well, you broke the law, so.
Yeah, I did. But
I've been on those courses, not virtual, back in the day when it was, in person. And, I remember there was go around the room and ask for, ways that you could manage your speed in a different way. And I said, buy a slower car. And apparently that's not an answer.
I know, but do you know what?
That's a really logical thing.
At one point, right, we started off, and Borat's dog, George's dog, was barking like hell for like 5 minutes. Shut up! You go, stop! I said, George, put him in a different room, you fool.
Or mute the mic.
I know. Exactly. That's what the host said. George, can you mute the mic, please? Oh, sorry. Yeah.
Very nice.
He shouted at his dog. Shut up! His dog doesn't know, does he? Shut up! His dog doesn't know what a shut up is. Now, I remember. So I went to one where I living in Cardiff, and I went to one in the hotel.
How many have you been to now?
Yeah, 2 near you, Steve. Near you, there's a hotel down the road from you. I went to that hotel for like a speed awareness course.
That's a brothel. It's not a spirit. It's speed awareness course.
Okay. But the lady taking the course was rather large, really large, and she had like, and she was, she got halfway through. They try and be a bit personal with you, didn't they? So they talk about their hobbies. She had 2 Labradors. And anyway, we come for a break, right? And this guy just sidled up to me, one of the guys on the course as well. We got tea and some biscuits. And he said, do you see her saying she walks her dog often? If you ask me, she's walking the dog a lot more often, right? Turn around and she's standing right behind us. Oh, brilliant! We're not going to get our points off now, you fool! And so she really looked at us and just looked at both our faces. I thought, I'm not involved in this. I got my points off, though. She was big, though. But, I don't know if... Yeah, anyway. Anything else, boys? Anything else, Steve, you want to go into?
No, that's it, I think.
Stevie, you're not in lockdown anymore?
As of Monday, we're not, no. So we still are at the moment.
Okay, all right then. Are you going to go crazy?
Not really, no. See, I've not really noticed it, to be honest, because I've been so busy with work, and obviously work just crack on as normal, don't you?
Yeah. Do you know, I've just got a WhatsApp off Megan. I've eaten really meat for the last... every now and again, if I'm forced to, I do. The kids are... Megan said, I've accidentally ordered KFC for us. Didn't mean to. I didn't mean to. How does that work?
I'm not sure.
So what are you eating then? You're on a hash brown sandwich?
Well, I'll just have the gravy, probably. or the chips.
Cooked in chicken.
Yeah.
Everything's covered in chicken.
Although the gravy in KFC is fantastic, though.
It is, yeah. I still have that. Oh, nice.
Okay, good.
Have a nice weekend. It's good to see Paddy joined us.
Yeah. Thanks, Pad.
Thanks, Pad.
Okay. Bye.
Bye-bye.
The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.